Alright traders, I am back again with another video, and I want to start this video off by looking at Elliott Wave and Ichimoku. Now I'm not a big Elliott Wave technician, but I do understand the concept and do know a little bit about it, but I don't really use it a lot because I'm going to show you why I don't use it a lot. Because basically when I'm using Ichimoku, I don't really need to even worry about trading with anything else, even Elliott Wave. I mean, a lot of people talk about using Elliott Wave, but the reason we trade is to catch that big third wave. If you're an Elliott Wave trader, you live to catch that third wave. That third wave is the biggest and longest and most profitable wave that you can catch. So when you catch that, that's what you really live for. That's like catching that big fish out of the water. So basically I'm going to take a look at two pairs and show you my little Elliott Wave drawing. And I'm not great with it, but I'm going to show you that we can catch that third wave all the time with Ichimoku. Ichimoku is going to always get you in the third wave, and it's going to always get you that profit of the third leg, and you're going to have more opportunities than one to get into that third leg. So let me show you. Basically, if this was our this was our Elliott Wave here, so we go 1, then we're looking like 2 here maybe, right? And then we come down to, we'll say here for 3, or maybe here for 3. So we'll come here for 3, and then basically up here for 4, and then down here we catch 5. 5 is usually a good wave too. It's usually the second biggest wave. It can be bigger than 3, I'm pretty sure, but 3 and 5 are the waves that we live for. Now 4 is the wave that's going to take a lot of your profit away from you, because a lot of times it's a sideways wave, and that's where you catch all of this and then you give most of it back in wave 4, because wave 4 is very tricky. Alright, but looking at this just from my wave count, you see 1, 2, 3. Look how big 3 is. 3, we could catch all of this profit here. Alright, so let me erase this and show you. We can catch all of 3 profit, wave 3 profit, and we can catch a lot of wave 5 profit also. Alright, so we can catch the biggest legs on this trend here, and we're catching pretty much most of that with many opportunities to enter the market. So I'll show you just a couple of those opportunities. So let's look at it really quick. Alright, so say we get down to wave 1 here, then 2. Now we're getting into wave 3. When we want to get into wave 3, we have an entry here off of the Kijinsen, right? So you would probably not catch another entry until somewhere in here. Now based off of my fractal trading, you can catch a trade here, but it looked like we would get a trade in this area, and then that's where we start getting stuck with the 4th wave. But then we get a nice drop here, and this looks like a good drop that we could catch here based off of some price action at the Kijinsen with the Kijinsen break, and then bearish engulfing, and then the market drops and we catch this 5th wave for a lot of that profit too. So we had a couple opportunities to get into this market. Alright, so even if my wave count isn't proper, when I get some of these waves that I see and do see some good drawings for showing the Elliott Wave predictions and waves, I'm always amazed at how Ichimoku always catches that 3rd wave. Alright, so let's look at another pair just to show. Okay, so this again, we're going to put the drawing on here. So I know that wave 2 can retrace up to like 61% of wave 1. So here goes wave 1. Then we're going to call this 2. Then we'll probably call this 3 down to here, right? And then this is 4. This is where you're going to give up a lot of your profits, and then we're going back down to 5. Alright, so we go 1, 2, 3, 4, and then 5. Guys, look how much of that profit we can catch. Now, as I said, wave 4 could be a problem wave, but look at wave 3 here. A lot of profit here, even wave 1, but you don't have a lot of chances to catch wave 1. If you don't catch wave 1 from the beginning, you're not going to probably get a good shot at it. But then that wave 3 and that wave 5 just really great opportunities to get into the market. So let's look at those opportunities as we can see them. All right, so wave 2 ended here, and then wave 3 started. With the start of wave 3, we have some nice price action developing right here and right at the Kijinsen. So we would have had an opportunity to get in the market here, and this is the end of wave 2 supposedly, in the start of wave 3. We would have had a good opportunity to get into the market there. Here's another area we bounced off of the Kijinsen. So a lot of these things I'm showing you are because I'm bouncing off of the Kijinsen and I'm seeing some price action. And then here's another wave, another entry that we could have got into that would have kept us in on wave 3. And then wave 4 was kind of sideways. Then the start of wave 5 was here and the market was sideways, so you would have had some issues. But then the market dropped right here, dropped right out of the pocket. So you might not have caught any of this, but you could catch, once we get another Kijinsen bounce back here, then you get an opportunity to get in the market here. Now wave 4 is where you have issues, but you would have still caught some good profits, because basically we want to be bearish because we're below the clouds. So you're always going to be on the line with Elliott wave anyway. And then this wave, we would have caught a nice trade here off of the Kumo bounce and would have given us a little bit of the market, and we would have probably looked for another trade here, and this is where we might have started having problems. Now it was still profitable, and then the market goes up again. We probably would have looked for an entry here off of a bounce, and then that trade didn't really work out. And then you had a Kumo breakout, and I don't know if that was a valid breakout or not, but anyway, just looking at that, maybe you lose that trade. So maybe in that wave 4 you would have been 50% with good profit, decent profit, and then you would have been waiting for wave 5 to develop. Now you're not going to be counting waves and looking at waves. You're just looking at ways to enter the market and looking at Ichimoku rules. So those would have been some of the things that you would have been looking at. So looking at Ichimoku, there's no need for me to really study hard analysis of the Elliott wave theory, because basically Ichimoku covers all that for me. Ichimoku does that homework for me, so I don't have to do that. So that's one of the good things. All right, so let's go look at some charts and look at some pairs that we can find some trading opportunities currently. And we're not going to be looking for wave 3s per se, but that would be a good thing, but I really don't have to do that. I just need to trade the market as I see it, and automatically and naturally I'll get caught up into the best wave just trading what I see off of Ichimoku. All right, so let's go look at what we see on the markets. So I wanted to take you guys to the very first pair I'm going to look at is this Aussie yen. So the yen has had some very good movement the past couple of days, and let's go to the daily real quick. We're looking at the Aussie yen. So looking at the Aussie yen daily time frame, wow, way over here is for that support level. So I wanted to go back to find the strongest support levels, and they lie down here. So I'm gonna probably draw these in because we're pretty close to that level, to these levels here. So this is a decent level here. I'm gonna put another level here. So we want to know where this support and resistance is here. All right, so it looks like pretty much there. We'll bring it down to this wick because they line up here. So you can see this past support level, and it's a very strong level, and it even went extended from 2000 and really way back from 2010. This level was extended, but now it appears as if we're approaching that level. So my idea is that I believe that we may see the yen, this Aussie yen, hit that level. Now currently I think we're going to see a correction because we're looking at the daily time frame. You can see this is probably some minor support right here. So you may have some minor support right here, quite possibly. And you could see how the market lined up at that level, because you could see just where the buying pressure came in, and this level was rejected here. So we may count this as a level where the market is holding support. And then what I'm going to expect to see the market do is pull up maybe like this to this level here, okay, because you're going to have your Kijinsen here. So that's going to be a level where the market may want to pull back to, get into equilibrium, and then boom, take off, go to the downside, and approach the levels that we're looking at for a pretty nice trading opportunity, which would take us down to pretty much 74.36. That's what we're shooting for, is that 74.36. So we got to get this correction in here. So we may see this correction probably start to develop maybe Friday, but you may be in a correction all next week, but then maybe near the end of the week we see a correction, the result of the correction ending, and we find an opportunity to get into a bounce. Now this could be a couple days or so, and it could even be longer than that week, but once we get that correction, we'd be looking for the market to go to the downside and attack 74.36. All right, so that's what I'm looking at on the Aussie yen daily time frame. Let's go to the Aussie New Zealand dollar, another Aussie pair. We're starting off on the 4-hour here, but let's start with the daily as we should. The daily time frame is going to show us that we're at a current strong support level. So these pairs are sitting at these support levels currently, and some of these levels are very strong. You could see this level started back here pretty much at about 2015, at about May 28th, 2015. You had some strong support at this level at 1.05645. We came back, attacked that level again here, and then we sat at this level, and then we hit it again. So how many times can we hit this level before we reject this level and violate it? All right, but looks like we got some price action here that's leading us to believe that you could see the market move to the upside again. So we're going to stay sideways here for a little bit, probably get a little move off of this level. If we get a move off of this level, eventually we may see the market drop to the downside. Aussie New Zealand dollar, let's go to the 4-hour time frame. Look at this. So 4-hour time frame, currently what I'm looking at, and nothing major, wouldn't be a really good trade or a big trade, but I'm trying to see what happens here with this candle to give me an idea. Now we're setting up a nice price action entry, but it's starting to move a little higher. Once this candle violates this Kijinsen, then my mind is to leave this pair alone for a while. I want to see what the market does, where it's going to approach. If it comes back up to this level, hits the Kumo cloud, maybe we'll get a cloud bounce and trade to the downside. Now we need to see what's going to happen here, so we need to be patient, because we quite possibly could still get a trade to the downside if the market doesn't violate this level here. So if we do not violate this fractal, because you could see there's bull fractals here. If we're not violating bull fractals, we must be violating bear fractals, or we're violating both. Okay, so if we're violating bear fractals, we want to stay with the structure of the market. The structure of the market is bearish, so that would lead us to believe we're not going to violate any of these bear fractals, and we can always use them as, not the bear fractal, the bull fractal, and we can always use those as support and resistance. We can use those as stop losses. All right, so if this level is rejected here, we may see a price action entry and a trade down to this certain level here at about 105.645, and I'll probably even move that up a little higher too, just so I'm not so greedy and catch some of this market. And it wouldn't be a really big trade or a really great trade, because I think I'm not confident of the market breaking this level right away yet. So I have this little zone here. You see that 105.793 and 105.645. So if we get a trade off of this area here, and we're still an hour away from this candle closing, we need to see how it closes, what kind of price action it gives us, and then quite possibly we could get a trade here and trade down to this point here. Not going to be much of a big trade, but it's going to yield you a good 60 pips or so, 50 to 60 pips. All right, and then we're going to be careful here, because this level, I don't believe this level will be violated soon, especially with the end of the week coming up. So that's what we're going to be looking at the Aussie New Zealand dollar, guys. Let's move on to the Euro Aussie. Euro Aussie 4-hour time frame. Now the Euro Aussie, basically, I don't even know why I really wanted to show you guys this, because it's really sideways. It's consolidating. You can see a lot of rejections here. Basically, we hit this resistance level here at about 105.9978, and we hit that level. You could see there's a little bit of divergence here. So this is bearish divergence. So you ought to see the market move to the downside slightly. Now there's a couple levels that I would be looking at, and if I'm looking at this, you could see we want to start to catch a range as soon as possible. So I'm starting to see this range, and there's a good possibility that this may be some range trading. All right, so we're in this area here. I'm going to draw the range here. All right, so we're looking like we're in that range, and now what I want to see is this level's honored right here by the market, and you could see we have some divergence from this area to there. Now with this divergence, we had divergence here, as you see right here. So I'll draw it in really quick, and then we'll look at it. And basically, I'm not going to explain much about divergence because this isn't really about divergence. I mean, I can tell you a little bit. Divergence is just when the indicator is doing different than what the market's doing. It shows a sign of weakness. And here was some divergence here, bearish divergence, and then the market dropped off. As you could see, the market dropped off. All right, so I use this for divergence, this divergence, to let me know where there might be weakness at support and resistance. So we have the market come back to this point here. Looks like we have divergence between these levels slightly, maybe not enough, but let's see what happens with this pair. Well, I mean with this area where we have a divergence. Now I still think you'll see the market drop because I think we're staying inside this range, and we're gonna maybe attack this level. All right, so you're starting to see a rejection of this upper level with these wicks here. You see these wicks, and that's starting to show you that there's some selling pressure here. So with that, gives us an opportunity to trade the market to the downside. Now based off of the 4-hour time frame, I probably wouldn't be looking to trade way down at this level. I probably would be looking to trade, let's go to the 4-hour. I first want to see if I can get past this point right here, because this is some support and resistance here at about 157.868, and if we could violate that level, then we should probably see the market start to attack these levels. I have another level drawn here. I want to make sure I get by that 155.956, and then that would take us down to probably about 152.826. All right, so we're sideways right now. You could see we're starting to get some volatility. We're starting to get some thickness. That volatility is with this sideways market here. As your cloud gets thicker, and then the weakness is showing we're below that Kijun-sen. So our midterm bias is bearish. All right, overall we're bullish because we're above the cloud, but midterm we're bearish. So as we start to lose strength, overall we'll become very weak and lose the whole market to the downside. All right, so that is going to be the Euro Aussie, guys. Let's go to the Euro Pound, look at that pair really quickly. So Euro Pound, pretty much the same thing, but what I really wanted to show you on this pair was the big divergence that we're seeing here. So with that divergence, this almost lines up pretty much like the last pair I just showed you, but I want to show you the divergence that I'm looking at here. So there's the divergence, and then this is trading to the downside as this is moving to the upside. That's a divergence. So we started to see a little drop off here. My thing is, will we get to this point, or will we get down to this point? If we get to this point, again, I see this market doing the same thing, sideways, and then we're trading in a little range. So we may see some sideways trading here. All right. All right. So that's what I see with this Euro Pound. Again, you see that weakness that I just showed you with the divergence, but now divergence can last for quite a while, so we don't just trade off a divergence. I really want that divergence. If I'm looking at this upper level here, I really take this to the daily time frame. I want to see if there's a real strong support and resistance level, and it would have been this level first, so that divergence may mean nothing until we really get up to a strong resistance level, which could be this point. So the market may not fall, and you may see the market just do a slight correction or a slight pullback here, and then you may see the market continue to this point, which would be a resistance level. So we could see divergence in the market all the way up to that point. All right, so divergence doesn't, especially on the daily time frame, you know, you see that divergence, you're going to see it for quite a while. All right, because look at this here. Here was divergence. The market was going higher. Let's draw this in, and look how long this one lasts for quite a while. The market was going pretty much higher, but the oscillator was going lower. And then finally you got your drop to the downside. All right, so we had a Kumo breakout, and then the market dropping. So that's what you're looking at. Same thing here. So we have that divergence. We're starting to see that divergence here. even from here, but that can last quite a while. It can last a little longer, even up to that support and resistance level I told you. So I really like to see, when I'm trading divergence, I really want to see that at a strong support and resistance level. All right, so let's move on from this euro pound. Let's move on to the euro US dollar. Let me find that euro US dollar. Where is that euro US dollar? All right, here's the euro US dollar. It looks pretty much like some of the pairs we just currently looked at. All right, you can see here, and this is going to be a strong level up here where I have this drawn here. So there's going to be support, resistance up in this area at about 114.839. So we could see the market attack that level still, but you're starting to see maybe an area where we might get a slight pullback and start to see the market come back and try to retrace before it moves higher. And then we might see, let's go to the 4-hour time frame, look at it, what's happening. So that daily, so we may see a little pullback down to this level here. Now you saw this rejection at the Kijun-sen. I talked about this. I believe I talked about this earlier on a video I did. But you could see this rejection here. You could see how we bounce off of this Kijun-sen. We may come back and attack that level, be in a sideways market, hit that level again and trade again to the upside, and eventually shoot for that upper point that I'm telling you here at 114.839. Okay, so currently I'm sitting here waiting on this pair. This pair is in flux. It's in the middle. I want to see it pull back to a certain level. Before I trade, I need to look at levels. I need to have an area where I'm already set to get into the market. So I already know where I want to look to get into the market. This is going to be my first area. This is going to be my second area. This bottom of the cloud, the third. Then if a breakout, that'll be my trading, my bias changes, and I start thinking to the downside. I trade the breakout depending on what my signals look like. So I know where I'm looking for this market to be before I get into a trade. All right, I'm not waiting for, I'm not looking at something and saying, well, I need to get into the trade now. I'm already set at where I need to get into the trade and know where I want to get into the trade. I just need to see what's going to lead me to get into the trade. All right, so that's going to be the euro US dollar. I'm going to go to the pound Swiss franc. Pound Swiss franc daily time frame. Really wanted to show you guys this because really there's not a big trading opportunity here looking at Ichimoku. Now with Ichimoku, we are seeing price below the cloud. We got everything bearish, so we really shouldn't be looking to trade long. But based off of this, you may see a bounce off of this level. This level is super strong though. I think it's going to be coming in at 139.626, but also you have this upper zone here that we're sitting at, which is at like roughly 141.397. So that area here, this whole area is very strong. You can see where we first formed that area at about looks like May 7th, 2015, and now we're still honoring that level here. So we may see a little bounce out on this level. I don't think we're going to violate that right away, but guys, a violation of this level eventually will lead us, I believe, to a couple areas that we would really be looking for, which would give us great trading opportunities. Would be down to this point first, all right, and then the second one would be to this point here. All right, so eventually you might see that. Okay, so you saw when the market, this is a big giant news candle, and I remember this, everybody should remember this with the Swiss franc pairs. But look what happened when the market came back up to that point where it fell. Look at where it happened. The market fell again. So now if we ever do get to that bottom here, we do probably want to trade that to the upside, because that'll be a big double bottom. Nice trade to the upside. Okay, just as you had that double top up here, nice trade to the downside. So now we have in the middle, we have some support. So we want to trade the bounce off of here. But looking at Ichimoku, I'm not going to trade this at all. But if I take Ichimoku off my chart, trade what I see as far as price, there's a possibility that we could see a pullback here, or a correction of this prior move here, because you're starting to see some price action at this level where that support level is. So you may see the market bounce and pull up to the one of these levels here, and then eventually continue to the downside. Okay, all right, so that's the pound Swiss franc. We are going to go to the pound US dollar, and then we're going to be almost done and getting out of here. The pound US dollar, I just really wanted to take a chance to show you this based off of the daily time frame. We're bearish here. We got all bear signals on the daily time frame, but we do actually, sorry guys, we do have some signals starting to lead us to know that either we're going to see a correction here or the market's going to start trending to the upside. Basically, we are in a slight correction. Is this correction going to last? I mean, we could stay sideways or we could violate. Now, from here, I think we would probably at least look to trade to this upper level. But being underneath the cloud with Ichimoku on the daily time frame, we wouldn't really even look for this. So one thing that I'm looking at is, guys, we started to violate this Kijinsen here. Once we start violating Kijinsen and bounced at this level, this starts to signify that there's a possible change of the trend direction. So we bounced on this level. We're still below the cloud. Our overall bias is bearish, sorry, but the midterm bias is bearish. So we need to pay attention to that. And when we go to the 4-hour time frame and look at this whole thing, the 4-hour time frame will lead us, because now this is kind of sideways, because you could see an Ichimoku is not great in a sideways market, and so it's not a indicator that you really want to use sideways. But a break above this level here, and you could see it probably break outside of this cloud, but really break this point here, leads us to probably up to this area here at 146,417. All right, so I think we're going to trade inside this range here for a little bit. So we may be in between that level. So therefore, that's what I'm looking for, a bounce off of this level and trade to the upside. Really not paying attention to the 4-hour Ichimoku, but looking at the daily Ichimoku and knowing that we're slightly bullish on the midterm based off of this trend, possible change of direction. But you could see that the market's making a consolidated move here. So we may stay in this little consolidation phase for a little while, which would give us an opportunity to trade this to the upside and then trade to the downside. I'll still trade a range within Ichimoku, but we still always want to look at our signals and trade Ichimoku as is. Now, I've been trading it for quite a while, so I do some things a little bit different than I would show someone new trading the market. All right, so that's the pound US dollar daily time frame. Let's go to New Zealand dollar yen, then US dollar CAD, and I'm out of here, guys. So New Zealand dollar yen daily time frame, again, another pair that I really want to look at, because again, look at where you see this big news day here. So with this news day, you see the rejection at this bottom level. So why did we have a rejection at this level? Then you can see where some support and resistance set up again. So this support level sitting here at 74,629. We bounced on it for 1, 2, 3. This is the 4th time, and you could see the rejection we had here. A lot of buying pressure coming into the market in this area, and it's same thing here. So when we had that rejection and the buying pressure, the market did move higher. Same thing here. Now we want to see if the market's going to continue to move higher. So I think eventually, if we violate that level, we're going to see the market fall to 72,376. Now with this bounce here, all I'm going to be looking for on my trade is for the market to pull back to a level where I could trade it back to the downside and eventually look for 72.37. All right, so if I go to the 4-hour time frame, the 4-hour time frame is still bearish, and there's a signal right now, and I'm looking at this and I'm looking to trade inside out on this signal here, and we want to see what happens here. So I'd like to get below that level. If I close below that level, or I pretty much would be looking to trade this to the downside, continue with what I see here, a violation of the Kumo here, the market consolidated, then continue the downwards move, maybe a little consolidation and then continue that downwards move again, eventually leading me down to first 72,367, and then overall, what is that going to be? Let me crush this thing up. Let me look at it on the daily, because I can't see what it is. That's gonna, yeah, 72,376. That's what it would take us to. I was looking at 74,629, but we'll get right past that level. All right, so that's what we would be looking at for the New Zealand dollar yen. Currently, I know where I want to trade. It's not that I'm not in the area where I wanted to really hit that trade on the daily, but looking at that 4-hour, it's starting to show me this is where I want to be looking for my trade. So I want to see what happens. I need more confirmation than what I'm just seeing here, and then I can possibly get in a trade to the downside. All right, so let's look at our last pair, the US dollar CAD. I think I went over this pair earlier. This pair is very interesting. Okay, so the dollar is showing weakness after Chairman Yellen's remarks about cutting interest rates, really increasing interest rates really gradually, not gradually, but very slowly, and that led us to see some weakness in the dollar. So the dollar got weak, and with the dollar getting weak, then the pairs that it's versing have to become stronger. So that automatically made me believe the CAD would be stronger. Now I was looking for a bounce off of this level here at 137, 163, and we did have that slight bounce, but we never got any further because you had that dollar weakness, and you could see these rejections in this level here. So this level is being rejected from this upper level where we're seeing some selling pressure coming in the market. So what I'm looking for is the market to drop down back to this point here at about 137, 163. So I'm looking for this to happen here. So yes, I am bullish with the Ichimoku system, but I'm also bearish, and I'm going to tell you why I say that. So I'm looking for the market to come back to this point and then maybe stay sideways for a while. Then maybe we get a Kumo breakout and we see this thing go to the downside. All right, if not, we're going to bounce around here and then we'll go break to the upside. And right now the market is in an area where it needs to tell us something. So let it sit here and then let it tell you what it's going to do, because it either has to break to the upside or the downside. It's sitting here. It can't stay in this point forever. It's in a level just much like this. It had to tell you what it was going to do here. It told you here, and it told you it was going to the upside, and that's what it did. Went to the upside. It showed you no signs of going any lower to the downside, and it didn't go to the downside. All right, so you have to look at the market, pay attention what the market is telling you, learn how to listen to the market and listen to the signals that it gives you. All right, so what I'm looking at right now is basically I want to see what's going to happen here. I want to see this market get back to this point. When the market gets to this point, I believe this would be a very good point for us to concentrate on our position, because it could be a strong selling point, because you start breaking this first bear fractal, which would be vital for us and for the market structure. But currently, guys, the market is just sitting still, consolidating, and this is 1, 2, 3, 4. This is the 5th day that it's doing absolutely nothing. So it's showing weakness to the upside, but it's also showing bearishness midterm, because we violated our overall midterm trend line, which would be this Kijinsen. So this signifies a change of trend direction. So if that's going to stay in accordance with that, we will see a violation and a breakdown here, maybe a Kumo breakout or a violation of this fractal level. See this crossover here. Everything else will be bearish, and then you may see this market drop to the downside even more. All right, so that's what I'm looking for the US dollar CAD. My bias will change with the CAD once we break above this Kijinsen. Even though my long-term bias is bullish, that's starting to become a sign, a little bit weak too, because we're starting to approach that Kumo, and we may be sitting inside that Kumo shortly, which will be a turbulent situation, and the market will be all over the place. So let's just give this a chance. Let's see if we could get to this point here, and then that will be very vital. That will signify where we're going to go and what we're going to do. All right, but even a trade to that point can happen. If you're going down to this 4-hour time frame and you look at that, you could quite possibly get a trade to that downside here. Now, based off of the 4-hour, there's a possibility that we may see this market go higher, but you could see everything's starting to go sideways on the Ichimoku, which would let me to believe that we're going to range in between this level and this level, or maybe even this level here, because that's what this is showing me based off of Ichimoku being sideways with these crossovers and another crossover. Whoops, sorry about that. All right, so show you these crossovers are what is signifying that the market is ranging. One of them, we had crossover here, crossover here. You can see how flat the cloud is. Pretty much it's very thin. It's not angling to the downside as it was here, nor is it angling to the upside as we'd love to see it doing. Either or. We don't want to see it doing this, what it's doing, and that's sideways. The market's going nowhere for us right now, which would mean we're in a range. So if we're in a range, what can I do? I can trade that range level, and this would be the 1 level. This probably the 2nd level, but again, it could be this level based off of that daily time frame. So I would at least look for the trade maybe down to this point at 137, 163. All right, So that's going to be it, guys. That's going to be the Ichimoku system, explaining some pairs and looking at some things. Guys, come visit me at FX at One Glance. I also have a Ichimoku video course, home video course. Got some videos where you watch and take a test and you're able to study and learn more about this Ichimoku system. You can watch the videos 24/7, 365 all the time. All right. So guys, until next time, have a great weekend, a great trading week next week, and God bless. So long.